Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, welcome to the week that was, the weekly podcast that sums up market movements and events from the past week along with their implications on asset markets. I'm Michelle Castellino, your host for this week's episode. Let's start with key global developments. Over the weekend, the US and Iran made meaningful progress towards a potential peace deal. US President Trump indicated that an agreement was largely negotiated, with a key focus on reopening the Strait of Hormuz. Talks resumed in Doha with senior Iranian officials. However, Iran cautioned that a deal is not imminent, with key sticking points still remaining around its nuclear program, uranium stockpiles, and sanctions relief. Markets reacted positively as oil prices dropped sharply. The S&P 500 rose 1.6%, MSCI World gained over 2%, and MSCI Emerging Markets surged about 4.4%. Back home, Indian markets also ended the week higher. Nifty and Sensex were up about 1.6%, supported by optimism around easing geopolitical tensions, along with the sharp rise that we saw in the crude prices. Broader markets outperformed, with mid-caps and small-caps rising 2.5% and 3.1% respectively, recovering from last week's correction. Gains were broad-based, led by rate-sensitive sectors. Realty was up 4.5%, while banks and auto gained around 3.3%. On the other hand, defensive sectors like pharma and FMCG saw marginal declines. Oil prices saw a steep correction, falling nearly 13% to close around $97 on Monday. In fixed income, bond yields eased at the longer end. The 10-year G-Sec yield fell by 10 basis points to 7.03%, and the 5-year declined 8 basis points to 6.86%. The call rate also dropped 28 basis points to 4.90%, largely driven by RBI's liquidity injections, including a recent 3-day VRR auction of over 80,000 crore. The rupee strengthened by 1.2% against the dollar, supported by falling oil prices, improved global sentiment, and a weaker dollar. From a policy perspective, the RBI is unlikely to use rate hikes to defend the currency. Instead, it is expected to take a more calibrated approach, allowing gradual depreciation, actively managing FX liquidity, and curbing speculative flows to maintain stability. That said, markets are now beginning to price in the possibility of rate hikes in FY27, a shift from earlier expectations of a prolonged pause. While a pause in the June policy looks likely, given inflation is still below the 4% target and liquidity remains adequate, there is growing expectation of a 25 to 50 basis point rate hike starting August if inflation pressures persist. RBI's May bulletin was also out over the week. As per the report, India's high-frequency data continues to point to a resilient economy. Industrial activity remains steady in April, supported by growth in core sectors like cement, steel, and electricity. Manufacturing PMI improved slightly, although cost pressures and geopolitical risks kept the momentum moderate. Auto production remains strong with double-digit growth across major sectors, while cap goods imports also saw strong growth, indicating sustained capex momentum. On liquidity and credit, while conditions eased in April, they tightened slightly in May, with the money market rates and bond yields moving higher. Credit growth continues to remain robust at around 16% year-on-year, significantly outpacing the deposit growth at around 12%, leading to a widening funding gap. On the external front, net FDI saw a strong rebound, rising to $7.65 billion in FY26 from under $1 billion the previous year, signaling improving long-term investor confidence. However, in the near term, foreign portfolio investors remain net sellers through April and into May, particularly in equities amid ongoing geopolitical uncertainty and tensions in West Asia. Hence, overall, the economy continues to show steady growth momentum, supported by the resilient domestic demand, strong credit growth, and manageable liquidity conditions, even as risks from inflation and global factors remain. That's all for this week's edition of The Week That Was. If you found this update useful, don't forget to like, share, and subscribe. Thanks for tuning in and have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.